Good evening, guys. Counter Towards Capital Nightly Strategy Podcast for September 16th, 2024. We'll start with a sniper trade. We had a little lesson in the coaching session tonight, just to recap that if you have an OR, let's say you have an OR 10, that opening range 10, and after the first 10-minute bar, you want to buy the breakout or the breakdown. And let's say, so you had an open here and it went that high and went that low and closed here. And now in the next candle, it takes this out. You're going to be long from here with your stop at the low of the OR10. That's typically about an R5, which is the same as two R10 boxes. And there are 10 R10 boxes from the low of the day to the range stat, which we define as the maximum reasonable intraday trade. That's the range stat. Maximum reasonable intraday move. And that's based on statistics. That's the most that you could reasonably expect to get. And so if we establish that as the upper limit of a reasonable price target, and if the OR10 is here and it's equal to two of those R10 boxes, or what we call an R5, then that means there's 1, 2, 3, 4 of those available. So you have a 4-to-1 reward to risk trade on the upside. By the same token, if this thing fell out the bottom, then you'd have a 4-to-1 trade to a range stat down move, where you'd go from the high of the day and measure it down. Well, that also tells us that you could probably allow it to move an additional R10 and still have a 7-to-3 reward to ratio if you go here. So even if you're not precisely on the move, you do have a little bit of a cushion to be able to still justify that trade. That's the kind of detail work we do in the coaching. We went through a couple different examples of how that might work. So let's go to the sniper trade of the day. So here's a live trade with XLE, in which we're trading. This one happens to be the OR3, and the reason for it is that the yesterday's close, there was a big gap up to here to the open, and that's a large enough gap that it was larger than the average gap plus a standard deviation, so that qualifies as a large gap. So that means we're ready to trade it right from the open. So we take an R10 and we bracket the open. So now, even if it's the first bar, if that thing takes off and goes an R10 above, we would be long here with a stop here. And conversely, if it fell out the bottom this way, we'd be short here with a stop here. Now, with that stop, which is therefore located at the open, our job, the only thing we have to do once we get that mechanical entry is to get our stop above that entry. So if that was our entry, my job is to lock in that little move, that no lose plus dinner for two, because then the rest of this move to the upside is a science project. And I don't have to worry about losing money. Conversely, if it goes to the downside, then my job is the same job, is to get my stop below my entry so that I can lock in some favorable amount of gain Again, no lose plus dinner for two so that I can make bank and get my psychology out of fear and into disinterested science project so that I can be a good professional mechanical trader. So this is the gap up in XLE and the R10 bracket. And it moves in our favor. And now notice right away in that very first 3-minute bar, it has moved to give us, if this was that's our risk. It's already moved to R in our favor in the very first opening range. Now, I would ask you, what is your average win? What is your average win? If your average win was like a 1R, then you automatically should be moving your stop from here up to here to lock in your gain so that you have an average or an above average win no matter what. I don't mind if you use discretion to exit anywhere inside this range. This is the amount of wiggle room that you're willing to give it. And you can make any decision you want about taking the exit sooner than this mechanical exit. But you can't, once you establish this stop, you can't let it go back through there. So how did that work out? I take the 1-2 exit at the red dot to lock in a little better than 1R. And then when it crosses below, excuse me, when it crosses below the VWAP, that's the intraday VWAP, and it's moved that far from the high of the day, I'm playing for a return to the low of the day, and then a move all the way down to yesterday's close. So I go ahead and make my stop and reverse right here. And I'm even in that same bar, I'm already in the money. Still okay. Inside bar. New low. I love it. Now, if I'm here, my stop was here. I bring my stop down to like about there so that I can lock in that much goodness because my entry was here. And now I move my stop down to here. So I've locked in that much. That's another 1R. Move my stop to here. Should have gotten out. Ended up getting that exit for about 1R. So that's about 2.5R in the opening ranges of XLE. So that's that illustrates what to do with a large gap. Instantly put the bracket on and then play the breakout either this way or that way. And the trick, get your stop to no lose quickly. All right, let's take a look at the traders today. This is Devon Energy and Tim. This is essentially the same energy trade that you just saw me take. Only Devon Energy that he's trading here had an open and then run up, and then he had technical issues with the trade. Couldn't get it until the second leg down, which he gets 0.9 on. So we'll take that. On Nvidia, he's able to he gets paid once, but it suffers a couple ankle biters here for half an hour loss. So he ends up positive for the day. Hamad got chewed up a little bit on this one. And mostly not taking the trade uh, right away. You know, he takes the OR 10. It fails here, so he takes that loss. Now, when it comes below his initial risk and it's below the VWAP, and this thing rolled over decisively, that's a good short. And then you get paid an R all the way to here, and then you get the exit where you should, and then that becomes a 1.3 R trade instead of a 0.3, and that turns your frown upside down. That would have given them a 0.5 for the day. Jonathan, I would look at this one, a high, a low, a lower high. It reversed at the VWAP, so I believe you can get when the R10 comes out of the dragon, I think you can get this. That's still a pretty good entry. You got paid. I like the re-entry and then the quick cut. I like this re-entry on the collapsing dragon. I like the quick cut, but now I like this here because you've crossed the dragon, you've crossed the Bollinger Band mean. There were two shots of this thing failing, and it didn't really fail. I might take that one and give that a shot. EWW was a tricky one today. I think the Kata 2 entry was here. You have a low, a higher low. It's crossed the VWAP, left the dragon, crossed the Bollinger Band mean. That's a good entry right there. You might have ended up scratching, but it saves an R. Conversely, this is a pretty good entry either here or here. It's come through the it rolled over, came through the dragon, came through the VWAP, so I think you could get here. Or if you wait for it to cross the Bollinger Band mean, you can get short there. So either one of those is a winning trade. And then when this holds tightly, you could consider whether you want that trade or not. I probably don't take it because this was such a strong resistance. But if you take that trade and it only gets to here and rolls over, you're not going to lose money because you can exit anywhere in here that's north of the VWAP and you entered on below the VWAP. That's your value play, and this preserves your profit. So that would be reasonable. Kevin gets basically a scratch in here. That's a reasonable play. No, no improvements. Um, Beautiful on Devon Energy. He also gets that short right after the RL crossover outside the dragon. He gets a nice 1, 2, 3 short. Gets paid for 1.7 because why not? And then it fails to fail further. He plays a 1, 2, 3 long, 1, 2, 3 long, and it comes back through the VWAP, so he gets a little fraction for a 2.1 R day. That's nothing wrong with that. Let me tell you. I might have thought about it out here. It failed to fail all day, and here's where it crossed the VWAP. I'd have been tempted. Let's look at the daily. We're within spitting distance of the all-time high. Easier to see on the 30-day chart. You've got your 3-day anchored VWAP, the 5-day, the 10-day, the 30-day, and prices all north of that. And this right here is the all-time high. The only thing to be concerned about is that just as this thing had a nice expansion and then stalled near this height before a sharp pullback, this had a nice explosive move up, and now we're getting half size moves each time, getting smaller and smaller and compressed. So any break below 560 puts this in risk to come back to here. But I like that as a favorable day on a Monday. And tomorrow I'm expecting a breakout from that doji, and I'm ready to get long at 562.84 or short below 560. So with about a $3 risk, that's a trade that I'm prepared to make. And the downside target would be vicinity 547 and a half, the Bollinger Band mean. So that's like a $13 move on a $3 risk. That's a little over 4 to 1. I like that. And then the upside breakout trade, there's no reason for it to slow down if it breaks out. So you have a compound critical state developing right here, ready to break out from that very narrow $2.80 range. Whoops, sorry about that. Hit the wrong button. All right, dashboard one, bullish normal, strongly overbought in all dimensions. We're in risk off as we are now being prepared for sharp moves in either direction and a rebound off of all-time high. Says there's a strong chance of a downside move. What this little signal here says, Latin America is by far the weakest of the global sectors. So if tomorrow is weak and ILF is worse, you should be pounding ILF short. That's what that signal says. In the Dow, mixed bag. Apple and Boeing were weak for today, but really strong moves in the industrials like Caterpillar, Disney, Home Depot, IBM, Pfizer, United Health. Still a good handful of symbols that are on sale for the auto framer. I love Intel right here. It had a really strong day and 7%, or no, 14%. Sorry about that. And it's semiconductor tech leader, ready to go. And it's still 5.5 to 1. And then strong moves in the ETFs, diamonds, Asia less Japan, real estate, treasuries, and consumer staples. Still half a dozen symbols that are testing out well. Lots on the auto framer to work through. And I just want to look at the today's range was so narrow that that's why you're seeing a lot of symbols on the daily squeeze. Let me come back to that. Yeah, that's your auto framer. And then your daily squeeze. These are all the ratios that you get if it just makes a range stat move and you're using the full daily range as your risk box. So NVIDIA, Tech, Intel, NASDAQ, SPY, Cisco, real estate. That's the entire broad US leadership in the market, all on a daily squeeze, just like a coiled spring ready to blow. Tomorrow's good chance for an explosive move. Equal mix between summer and winter now. Haves and have-nots. You can see that today was mostly a wild upside day with only a few weaknesses like Nvidia, Apple, and Boeing. And the ETFs were just universally enthusiastic today. good start to the week for them. Our R10 Z-score has come off the -2 sigma and has come all the way through the yellow river, is now at +1. This is the pause that refreshes right here. The last couple times it was there, significant sell-off. So I'm ready for this, but I'm also ready for the third time as the charm to break out. So we'll see. That's everything for today. We'll get this published and posted, and take good care.